US equities have had a pretty robust performance this year, up until the most recent wobbles, concerns about whether there'll even be 3 cuts this year as well. What do you think about the US and the leadership we've seen within the US?
Yeah, I mean, it's been the market to chase really since the beginning of last year. It's been the big outperformer, that in Japan for specific reasons, but the US, and as you say, there's been a very focused leadership. There's been very narrow leadership. The Magnificent Seven, although I think after last night and maybe the months before, it's really the 6, right? Tesla is obviously a special situation. I think we're all familiar with that. But you have had incredible concentration. So we did some work to look at the top 10% of companies by number as a share of the index as a whole. And they're about 3/4 of the index. That's the highest for 100 years. So you have a very, very narrow market in terms of leadership, performance, and earnings delivery. The market is depending a lot on these companies for delivery. Now, ex-Tesla in Q4, they beat. They beat by about 7% in aggregate, and we'll see how they do in the Q1s. So for now, I think the US has got the macro backdrop that you mentioned, Steve, and I think it's also got the earnings, and that's what's driving it higher.
And yet, when I look at the Magnificent Seven ex-Tesla has got some amazing companies. No one would doubt that Microsoft is a great company in so many ways. Apple is a great company in so many ways. NVIDIA, the story speaks for itself. But you can be a great company priced too aggressively, priced for too much growth, priced for little margin for error. When I look at Microsoft and I look at the chart of Microsoft and I look at the 5-year chart, and this, just for example, the company was trading $140 in 2019. As it recovered from COVID, it was $239. It's now trading $421, 32 times forward as well. Love the company, hate the valuation.
Yeah.
And that's Microsoft, and that's one of the more moderate ones.
Yes. Now, to be fair, the valuations are full. I mean, the market as a whole is 21 times forward for the US, and it's only been higher during COVID when earnings crashed and the TMT bubble. So aggregate valuations on the US are full to expensive, I think you'd have to say. But then again, I go back to the earnings delivery. And if you look at these companies as a group, the 7 companies, they're delivering, if you annualize the Q4s, the most recent numbers we've got, they're running at about $400 billion a year of net income, right? So this is an incredible growth and a very large number. So as long as they keep delivering, I think the valuation problem is part to the side. Now, the minute they stop, of course, you get that reversal. And there was certainly some concern from investors about how momentum as a factor and this narrow leadership has been so powerful. And of course, if they start to reverse, that has wider ramifications for the market.